Hey everyone, today I'm going to talk about private equity, why I didn't get private equity involved, and I didn't sell out to private equity at this point in time. According to one study, in 2021, 25% of all hospitals have some sort of private equity involvement in the United States. That's mind-blowing that 1 out of 4 have private equity involvement, especially when you start taking away the fact that the other hospitals, a good portion of those are owned by HCA or other publicly traded companies, which private equity usually doesn't have a lot of involvement in. I guess first off, let's define private equity involvement in any group practice. Groups that are not listed on the stock exchange still have number of shares listed for the overall company. Private equity is an investor or group of investors that comes in and says, I want to buy a portion of the shares for a certain amount of money to have influence over decision-making capability for that practice. Some of the negativity that you'll see online is reducing staffing concerns, focus completely on metric-based, decreasing the less profitable portions, such as maybe pediatrics for a certain group, getting rid of that department entirely. And then the ultimate concern for physicians is loss of autonomy. There's a study that I'll post below about private equity versus non-private equity deal. And the short of it is, even though private equity will argue that they actually hired more RN staff, they didn't hire as much compared to non-private equity corporations. The study even highlights that in private equity-based deals, that total staffing went down in private equity deals compared to up in non-private equity deals. Where private equity shines through is basically throughput and metrics. More admissions to the hospital at private equity-owned places, more discharges, decreased cost per patient admitted to the hospital, and even better collections from insurance companies, including Medicaid in the study, which had significantly better collections in private equity-based groups versus non-private equity-based groups. All right, so on to why I didn't get private equity involved. Well, the first thing is I'm too small. There's a group that has been aggressively marketing towards me called Privia. While they may be a wonderful group, I did not want to sign with them because even though their insurance contracts are higher than what mine are, the 15% fee that they take out as the administration fee, that would have eaten away any potentially gains that I would have gotten by just remaining solo. This comes to the very first point of why I didn't do it, and it's control. Look, I started my own group because I wanted to control how I practice medicine, where I practice medicine, and everything basically on my terms that I could control. And giving up control to a private equity group means that I'm going to be giving up a portion of my company to another group that has other interests or goals at heart. The divestment schedule. My timeline for me practicing medicine, since I'm relatively new to medicine, I've only been practicing about 8 years now. My timeline is 10 plus years. Most private equity deals are going to want you to exit or have an exit plan in 5 to maximum 10 years. One of my good friends who owned a 5-clinic location, they recently sold out to private equity. And in those terms, they basically told me that they had to sign a contract saying I'm staying on for another 5 years and I have to open 1 more clinic location per year for the next 5 years. And if I don't, the terms of the agreement for all these bonus structures significantly erode. So now all of a sudden private equity is involved, they get a cash infusion into their practice, but now they have this carrot hanging out in front of them of someone else telling them what to do on their timeline, not your timeline. Circles back to control. I wanted to control the way I wanted to practice medicine in my business, which is why I didn't get private equity. The next topic is divorce. And I'm not saying divorce from your partner, divorce from the group that you sign up with, such as a private equity group. The reason I didn't sign up with Privia or one of the other companies like Privia is they make you use Athena, their EMR, which is expensive. Not as expensive as Epic, but still expensive. They also have a clause in there that, of course, because it's their tax ID, you're using their bank accounts, and they actually have the overall right to that data, the patient data. Even though they told me that I could potentially, terminate at any given time with a 30-day notice, when I started looking into the details, I'm signing a 3-year agreement with Athena. I'm signing a 3-year agreement with Dragon, the dictation service, along with Athena. There were a lot of clauses, potentially, about me being involved for a very long time. And if I break that, sure, I can leave. But the penalty is that I'm still on the hook for some of those costs. And it felt to me like it was basically good luck trying to get that information out of the medical record to switch over to whatever medical record I wanted to use for my patients. The other reason I didn't want to use them is Athena's wonderful, but it's expensive. Athena would not charge us less than about 6.5 to 6.9% per any collections that we obtained. That's absolutely insane. It would have been tens of thousands of dollars a month, where now we pay about $3,000 a month for our EMR. Anytime private equity gets involved, they're going to want their money back. That's fine. It's their investment. It's their money. They're not giving it to you as a favor. But just know, does that money infusion into your practice? Does that line up with your goals? If you plan on potentially retiring in the next 5 to 10 years, it might actually do that. The contract benefits. It's one of the things that Privia and other private equity groups really tried to harp on me, is that their contracts are so much better than mine. And while that is very true at the very beginning of you opening your own practice, and while that may be true at the very beginning, as you grow larger, you yourself can argue for bigger increases in your reimbursement from insurance companies. Actually, we just heard back that we're getting about a 23% rise in our Cigna contract by us arguing with Cigna on if we're going to get paid more or not starting at the new year. So yes, at the very beginning of me starting a practice, the delta on what I was getting paid versus what they were getting paid was significant. But now that we have about 16,000 patients and we're arguing for higher rates, based on my last meeting with them, it sounds like their Cigna contract was only 5% better than my contract now. And remember, private equity, for at least this deal in particular with Privia, wanted to take 15% off the top. So now I potentially would have been coming out behind, especially since I'm using a lot less expensive of a medical record. Personally, I did not start my practice with the goal of thinking about selling and selling out from the very beginning. While that may be an ultimate plan 10, 20 years down the road, I don't want to have that stress hanging over my head about metrics and meeting it. And if we have a down quarter or down month, freaking out about why did that happen? Maybe we have to advertise more. To me, in my opinion, it leads more to the patient is always right and leads more to burnout and frustration, because you're constantly trying to just do more. You're trying to have your physicians, nurse practitioners, or PAs see more patients. And let's be real, there's a potential pressure for upcoding to see sicker patients. Make sure you're billing at the most maximum level that you should be billing. Now, I have some friends that say that private equity worked out just fine for them. And I think that I would put a little asterisk there to say that it's worked out so far for them. Now, I don't know all of the inner workings of their practice, but so from what I can gather with my friends who have sold a portion of their practice, or know that the group as a whole has sold a portion of their practice to private equity, because their practice is growing and making more money quarter over quarter, private equity has been happy and on the sidelines. They have not been involved. I strongly suspect, though, that if something were to change, if the growth rate slowed down, if the income rate slowed down, I think private equity would probably step in and have a much different time and a much different appearance to the group in terms of aggressiveness with trying to tell them how to run their practice. I know famously there's a huge anesthesia group. I believe they're called North American Partners in Anesthesia. To my knowledge, they have about 6,000 different physicians or CRNAs. I don't know any people that are on the board of this organization, but I have friends that work for this organization, and they seem pretty happy in terms of work-life balance, in terms of bonus structures, and in terms of reimbursement overall. I think the idea that private equity involved is a bad thing, it's not bad for everyone. It's good when times are good. It's good for really large groups to be able to argue for extremely high reimbursement opportunities, basically having more leverage for your group. If your group is small and you get private equity involved, the odds are is that they're going to focus on growth, and they're going to focus on basically flipping your business and selling it to the next person in 5 to 10 years. And if you want that kind of stress, by all means, go for it. Me personally, I just chose not to get them involved. I chose to grind it myself, doing locums, basically saving up as much cash as I could and keeping costs very low in the beginning. All right, there's my thoughts on why I didn't get private equity involved. Hope you all have a good day. See you next week.